Hey everybody, hey traders, happy Tuesday. Welcome back to the final hour. Let's get started. Pretty interesting day, pretty monster P&L swing, and have a couple trades in that I'll be taking into the close. One of them is probably trading for full profit. That was a broken wing butterfly put fly this morning, and also took a nice little profit on the daily profit play. So carving out some wins this morning on SPX, and so far so good. Have a couple chart alarms set. This one all the way down here was a broken wing put fly. That was a pin price of 56.50, well out of the way. I thought it was well out of the way. Expecting maybe a bounce off the 5,700 handle today. That is the daily exponential moving average. Let's go back into the charts here. So the S&P just off of the 200 moving average. Futures actually tagged it this morning. We had ES down to, look at that, right there. Technically just pretty perfect. Right there, it's 57.43. If you're watching the futures feed, 57.43, put in a low and a nice little rip off of that bottom. Point wise, you've got a nice little run of around 103 points. Not too shabby on a $5 or $50 contract. If you go with the NQ, turn around the same area. This one also, let's go to NQ right here. NQ also tagged the 200 moving average and had a nice little run to the upside. So good lows, run up around 500 points today. Not too shabby. If you're watching the bigger time frames, you've got some structure, you've got a lens, you've got a plan, and this is what I've been waiting for. So am I crazy bullish right now? Not crazy bullish, but I have seen a nice little P&L swing. I think today I was upside down anywhere between 40, 50K and now positive 18. So that's a pretty big swing in P&L for the day. I'll take it, obviously, and I'm still going to hold in positions as is. I'll keep a close eye on this little bonus trade to the end. 58.75 is a potential profit trap today on SPX. So here is a broken wing put fly. This one is trading for 50 bucks, pretty much max profit. I don't think I have to close it. I don't really want to close it because it'll just cash settle at the end of the day. So that's fine. This one is my call fly, which is still upside down just a little bit, not by much, but I've got a 35-cent credit running on this one, as well as a $5 profit trap if we get into 57 or 58.70, 58.71, 58.72. Every dollar or every dollar up is another $100 in profit. So that is one potential bonus trade by the end of the day, and see what happens there. I've had a pretty nice P&L swing on XSP. Some of my waterfall income strategy trades have been running. I had about a $400 to $500 swing in my favor today. Just need a little bit more time, which I'm okay giving. Same thing on the Qs. Have a nice little waterfall trade, upside down just a little bit, but have some time. Nothing really threatening the QQQ into April until the 455 level. So we'll just keep a very close eye on these stocks and charts. Futures market taps the 200 moving average today on the daily time frame. I did end up timing a buy position pretty well. I dollar cost average into a 2K position on SPY. So I did end up taking a small chunk right here. So I do have a buy near today's low, around 575. I bought about $2,000 on all of my accounts right around that low. So it's just a stab. I don't think that this low is necessarily in. Today certainly feels a lot better than what it's felt. Yesterday was pretty wild and crazy. I did not expect that for a Monday to have that type of volatility. Even today is still quite volatile. I mean, it's a big directional push. It was a slow kind of grind to the day after we tested this low. But right now we've got to move low to high about 1.99% off the lows, and getting back to the close yesterday. So that is another full day of just crazy trading, where if you look back the last 7 or 8 days, I mean, it can be argued that everyone's overreacting, oh my gosh, this market is so bearish. But even in the 7% correction, 6.7% correction, we've still had really unusual trading days. The days have been pretty volatile. it's been interesting to say the least. So I've just been trading small, but trading through it, grinding like crazy, getting positioned, selling lots of premium, and that'll continue to be the MO until I feel like we got a coast is clear signal, and maybe that is still to be determined. So I still like this 200 moving average getting tested. I don't think this is necessarily done. If we go from this low to this low, if this is any indication of a topping pattern, this market might still come up and fail around the halfway point and then still have one more flush lower. That may be the trade that I'm looking for. So I would say pretty bullish on the market through about July this year. I'd say July to August. July to August this year, if the market can stay somewhat resilient and we can get a good buying opportunity, I think going bullish in positioning my option trades and a lot of my portfolio towards a bullish tilt into July, August, that's going to be the timing. After September, I am pretty much putting a big question mark. September to October, right? Or September even through December, just a big question mark. I don't know how this market's going to be performing. I don't know if this market makes, really good strides at all-time highs. I don't think we're there yet. I did have some interesting data points to share this today. Let's go to some highlights here. This is from Cherry Picks and Tasty Trade, Tasty Live. Top 10 S&P 500 companies, which we know they're household names. It's now the Magnificent 7 / the Elite 8 / Fantastic 8 / whatever you want to call them. But these 10 stocks, Apple, Microsoft, NVIDIA, Amazon, Meta, Google, which has Alphabet Class A and C, Berkshire Hathaway, Broadcom, and Tesla, those 10 stocks make up 34% of the concentrated S&P. So your market cap SPY is heavily, heavily, heavily influencing this. Well, Apple is down off the highs. Microsoft is down off the highs. NVIDIA is down off the highs. Amazon's down off the highs. Meta's down off the highs. Google is down off the highs. Berkshire blew to all-time highs with positive earnings and a cash load that has been one of the highest on records that Berkshire has ever carried as far as percentage of assets in cash, which is probably getting a nice little bump of like 4 to 4.3% with a treasury mix. And then Tesla's down over 50%. Or close to 50%. I think Tesla maybe had a bit of a comeback today. Broadcom is also down a decent amount. So lots of waiting and stocks. Here's Tesla up to 281. Let's see if Bitcoin's making a little response today. Bitcoin is up from 81 to 88. Another volatile day there. MicroStrategy, wild. I mean, hits this 241 level. This is actually, I'd say I'm kind of happy with what I'm doing here technical analysis wise. This is a high-low swing. I measured that symmetry. We hit right there pretty much to the point and we're up. So I'm not looking for some crazy move here, but I still have a collar trade with a 310 by 200. And if price goes lower, I have some time in the 200 and the out of money. Otherwise, I'll look to get it called away at 310 and hopefully produce a nice little winner there, but very, very volatile on MicroStrategy as one expects. Coinbase also ripping nicely off the lows. So far, getting me out of some trouble here with coin. And not trouble, but just like ratio spreads. And I really don't necessarily want to take a bunch of assignment on ratio spreads. Right now, my coin trade that is March 28th, 1, 2, 3. It is down about $300. But so far, so good. And I mean, I think I can repair it. I don't think Bitcoin is necessarily crashing. But I think there's some volatility we still have to navigate and make sure we're not doing anything silly positioning wise. All right, one trade that I've got to watch for the next 50 minutes is I'm going to go ahead and keep a close eye on. Let me set a chart alarm here at 58.70. That's going to be my profit trap level. So my profit trap level would give me some bonus credit by the day. We still have another 25 points to get there. And we'll see. I mean, the good thing is time is on my side for this final stretch. Here's what the trade looks like. Float this out here. Let's go SPX. So the trade that I put in, this is one more leg to this. Sell the middle, buy the wings. It was a 58.70. Sell the 75 and buy the 95. And these are calls. Buy, sell, buy. There we go. So this is my profit trap. Hang on a second. Let me change the expiration to today. There we go. That's a little bit more realistic. This is today. Okay. So I'll keep a close eye on this one. Here is live price of the SPX. If we're going to drift a little bit higher, I still have some forgiveness in here. If we start to ramp up end of day, then this little curve in the next 47 minutes will start to go also to match my profit trap. So potentially a $5 bonus. I collected 35 cents in this call fly. So if I get any bonus trading today, I'd love to grab $1 out of this. If I'm fortunate, that's going to come like the last maybe 15 to 10 to 15 minutes of trading today. If somehow I can let this thing settle in for the final minutes of trading, maybe even sprinkling in a $2, $3, $4 bonus trade. But if it just starts to fade from here, that's my 35 cents. On the opposite side, I have a put fly that is trading for full profit. So just on the credit I received at 50 cents a contract, there is probably a 99.99% chance that that trade is going to be fine. So it was all the way down to 56.50, which is way down here. I doubt in the next 45 minutes that we're going to dump. So if anything, I'm looking for a profit trap on the call fly, and we'll see how that plays out. Okay. EuroCAD, Pound CAD. Yeah, Mike, I see that. Euro New Zealand, Pound New Zealand, Euro Aussie, Pound Aussie, EuroCAD, Pound CAD. Those commodity currencies have been getting hit pretty hard. And, Aussie's been excessively weak. New Zealand's been really weak. The CAD's been really weak. Euro and Pound have been actually doing really, really well. I don't know if that's also a testament to a weaker swing on the dollar, where it's just going elsewhere. But yeah, Aussie, CAD, and New Zealand all have been really weak respective currencies to their peers. The Japanese yen's been a bit stronger. The euro and pound have been pretty firm. So yeah, I mean, if you're long, but also keep an eye on those bar counts. I mean, we've got 7-8 candles in a row on a lot of those pairs I mentioned: Euro Aussie, Euro CAD, Euro New Zealand, Pound Aussie, Pound CAD, Pound New Zealand. It's like straight up price action. So like 6 or 7 days in a row, 6, 7, 8 days in a row, all green. That is not really a sustainable rally. So I'm not looking to call the top or anything, but I missed the move because I just saw it choppy for the last couple of weeks. So and then all of a sudden, the last 5 or 6 days, as the market's been dropping, it's almost been like a pretty obvious risk off tone. So what else do we have here? Stocks here, and historically, what happens when the S&P 500 it's over 20? If the VIX is over 20, what historically happens? I think this is good context to just think about what this market's capable of doing. So the VIX is currently around 25. I think we're retreating off that right now. So let's go to the VIX right here. So the VIX is trading at 22.03. We are the high today was around 26.45. We have faded down into a red candle. But again, good context. So currently at 25. This data was pulled this morning from Tasty Trade. What happens? The S&P 500 and the VIX has gone over 20, which would be considered heightened market fear. Point number one: S&P 500 has an average 1-month return of 0.48% and the median return of 1.37%. So what happens when historically the market's at 0.25 VIX? A month later, it's positive. On average, the 1-month return from that point is positive. Interesting. That could be a bit of a dip opportunity, right? That's what we saw maybe today. Market trend tends to be positive following VIX spikes. Positive returns 60% of the time. Negative returns 40% of the time. 120 instances. I'm not sure how far this goes back, but I'm pretty sure this goes back into the 90s. Range of outcomes. Maximum 1-month return is 10.7. That is nuts. And I don't know if that's like the same month, or I'm not sure when that period is, because the minimum 1-month return to the downside would be negative 24% during COVID. That would have been a February to March cycle. I'm curious what the 1-month return is on the positive side. Maybe that was post-COVID, maybe, but I'm just trying to think, like, if you're taking the VIX over 20, what does that mean? So their summary here in a nutshell: this supports a contrarian view that fear often presents opportunities in the market, which I agree with. I did an interesting test this week, which I thought squeaky clean trading. If we're above 20 on the VIX, I'm just going to pull this data. Let me see if I can go into my option Omega tool here. Give me a second. I'll sign into this and I'll show the test that I ran. So basically what I was doing is looking at like a 40, 50, 60-day window to sell some premium. And I'm only doing it with the requirement is I want to see the VIX over 20. And just to show that it's a good opportunity for the expected move and the applied volatility to be high enough that the actual move doesn't get there. It doesn't go beyond, it doesn't really threaten. You're basically selling premium on the market's uncertainty, and then that IV slowly starts to dissipate and dissolve. And that IV, it's not a crush. Like IV crush is more of an earnings thing because it's immediate. But this is like the balloon, just like the air starts to get, it leaks out of the balloon. So I put this in for DPP, VIX. There we go. This one. So over a 12-year study, this is a pretty smooth equity curve. Drawdown minimum, compounding growth about 5.6, only trading like one contract at a time, like very small contract sizes, and generating almost 50 grand. I mean, again, you can take it for what it's worth. I mean, if you want to trade one or two contracts, you're looking at probably max risk around like $1,000 to $2,000. If something blows through your highs or lows, you might be risking a couple $1,000s. But other than that, I mean, okay, so was it perfect and flawless? No, we had losers, right? We had a max loser of $3,900, and that would have been probably down here during this would have been 2020. So there's your kind of your COVID cycle through this. This is interesting though. This actually goes from February into May, May to May. I'm not sure if that was just the trades were taken from April to May, like maybe those April to May trades didn't work. But other than that, I mean, your drawdown from about 61,000 down to about 57,000. That's max loser. Other than that, you trade through it, you grind through it, you're back to all-time highs again in that account by August and September, and you're just seeing a nice little climb. So overall performance is pretty darn good. Trade log, lots and lots of winners. And again, like I said, I'm not trying to wow anybody with profits here. Like this is just something consistent, trading one contract. Anybody can scale that. It only takes a couple $1,000s of buying power for something like this. Would I be willing to stack trades up? Yes. Profit target at 15%. I also ran this with a 20% profit target, and it makes another like $9,000 or $10,000 in gains. So if we did a 20% take profit and run that, let that run in the background, and I'll show you the results there. But I think it ends up being like 56 or 57K, which is compounding around 6% a year. So anyway, looks pretty good. Okay. All right, Christian, what's up? How are you? VIX fading off the highs today, which let's see what happens. Is this another, dip opportunity? If it is, the VIX potentially retreats here in the coming days. If there's another leg higher on the VIX and we get more concerned, then all of a sudden we go from a 25 to 30 VIX. I would still be kind of buckle up and brace for volatility, but I'd still be looking for opportunities to sell premium. It's kind of simple. Big thing is, hold positions and stay firm, have defined risk. And that's a lot of what I've seen P&L swing-wise today has just been a lot of that, where a lot of my option positions, like Tesla, for example, I have some ratio spreads. Those option prices have changed pretty dramatically since we're down 40, 50%. My levels are not quite threatened, but here's what I have on Tesla. I have a 275 by 280 ratio spread. That was full profit. This one is a 255. So out for the next couple of weeks here, I don't have a threat on Tesla unless we're down below 250. That would be my break-even price. But these are also much, much lower, 255, 245. So I do want to keep an eye on this one. If Tesla makes a nice little recovery, okay, if we make a nice little recovery, I did buy some shares at 285. I did buy some shares at 362. So I've got a dollar cost average position in around $2,500 with a break even around $300. So from there, do we go up to the highs? I don't know. Probably not anytime soon. I'm just looking for this to kind of stop falling at some point. Just try to build a base, and then once we're on the right hand side of this trend line, I think the bulls are going to have their permission and confirmation to start going up. But that also is probably going to require a bit of a broader market effort. Okay, 58, 58. I've got 18 points, I think, to my bonus profit. Let me check on that SPX really quickly. Hopefully this is a nice, pleasant surprise. There's my broke wing butterfly for the put fly. That's going to expire for full 50 cents. This one right now is still trading about a $2 debit. I still have a pin around 75. I mean, come on, dude. Like, don't blow through my pin price. I'm in the final 38 minutes of trading. Don't blow through my pin price. Don't be a turd. So, I mean, I have risk on the trade, but right now, full credit. If we're closing below, if we are closing below 58.70, it's full credit at 35 cents a contract on the broken wing. I've got a profit trap. If we're getting remotely interested in getting into that 58.65, 58.70, that call fly should have some bonus credit as we kind of ramp up there towards the end of the day. What I don't want to see is just this thrust. I just don't want to see a thrust into like 58.80, 58.85, because anything greater than 58.80, I'm taking on some risk. So I still have some buffer, but it's going to be close. As soon as the VIX settles, we'll buy protection on the SPY again. Yeah, that's not bad. It's not bad. I mean, the dip is, like I said, I mean, the futures market was kind of I think that was the real reason that we saw the technical rally today, is we hit the 200 moving average. Oops, let's go back to SPX here. So your futures feed, you had the 200 moving average to the point. I mean, you couldn't have asked for a better technical trade right there on the ES feed, right? And then on NASDAQ, it was just a little bit more volatile through it, but it's still just right off that low. So markets clearly moved together. There's a nice recovery day today. I don't know if this is going to be a lot of noise and like a big shakeout here. There could be just a bunch of chop and shaking out before the market actually gains some traction. But just I don't know, let me change the color here. Just be careful on, calling this the bottom. I think it's a good opportunity in the near term to at least see if the market's capable of heading back up. But there's lots and lots and lots and lots of support right there. That support could easily become resistance. This market could fail to overtake these highs, right? So we have to keep a close eye on that. Oliver, Gamma Pockets. Yeah, that's why I have this software. I trade these things every day, man. So today's opening market we had some levels down here this morning. So when we had a run, it was 5,800 and 5,750 were my levels this morning. And since then, as the market bottomed out, it's been nothing but real-time flows to the upside. And the big magnet has been the 5850 handle. So, yeah. All right, here's the testing I was talking about, the 20% take profit. Very similar look, just a slightly bigger average winner. Same size max winner, same size max loser. Win percentage goes down a little bit. Holding pattern for a 20% target goes up a little bit. So instead of a 4-day hold, you're holding it for 5.8 days now. And considering you're going out 45 days, that feels pretty darn good to basically be opportunistic, sell premium when the market's got a VIX of 20, and within 6 days, you're hitting some profit targets. I actually had a kind of a fortunate trade this week. Was it yesterday? I think yesterday I ended up getting, I accidentally went 30 wide on one of my call side strikes, and I went 15 or 20 wide on the put side strikes. And because the market dropped yesterday, I was in for $6.20, and by the later half of the day, it was already down to like $5 a credit or $5 debit. So I took the $15.20 out of that trade within a single day, and that was a 45-day expiration. So pretty crazy stuff. Oliver, it's in my Discord. It's called Dynamic Trend. You can check it out on my Discord. I've got a affiliate discounts page. So if you want to hit me up with Discord or type something in the group chat. And I have a link in my Discord channel. Okay. All right. So we got to watch this bad boy. That chart alarm set at 58.70, and the last 33 minutes of trading. We could get lucky here. I might be able to get a nice little profit trap today. Give myself about 15, 16 points of wiggle room. Pin price is 58.75, so that'll make things exciting. A big, I've literally had a $100,000 swing today in my account. Favorable, which is good. Obviously, it'd feel terrible if I was like, yeah, $100,000 to the downside today. but it's not. So this was down about 60 to 70K earlier today, and now it's up 35. So that's a monster P&L swing. I'm not going to complain. So what I will be doing is, and I did this earlier today, I did protect a lot of my hedges, took some profits here on ES, took some profits here on MES. I did that across the board. So ES took some profit. This one is still running. It's up about $436 and it's maxed out 975 times 50. So that's 487. So I'm almost at max profit in this one. And there's only 17 days left. I'm just going to let this do its thing because I have a free hedge on here. And right now, I just want to see if price is going to dump a little bit further. The odds of getting to 5,200 is slim. Like this literally shows a 99.5% chance of profit. And even this one, for the out of the money hedge, like I'm just going to stay out of it. So I'll take the 975. I'll take the $500 winner. That'll be closed out here in the next couple weeks. Closed out all of my MESs except for this one. This is out to May. This is an out of the money put, and this is up to about $200 profit earlier today. I didn't close it because I'm like, look, if we have another flush down and it flushes out in a bad way, in a fast way, then this one again can jump up to maybe $300, $400, $500 in profit. So I still have a little bit of a hedge on MES, and that is about it. And then other hedge plays would be gold, silver, and also TLT. TLT is at 91.36. I'm up about $1,300 on TLT. I'm going to keep riding this for the next, let's say, 50 to 60 days if we get greater than 92. What I don't really want to see in the market is a 10-year yield that's going to go back up. So I'm not surprised we're getting a bounce today, but the 10-year yield is jumping pretty hot off this 4.1 handle. Again, market's making a run. We've had a 1, 2, 3, 4, 5, 6, 7, 8, 9 candle run to the downside on US 10-year. So that's not awesome. I mean, it is awesome, but it's not great when it's like, well, I wanted to go lower. Can it go lower? Will it go lower? I don't know. I mean, it's fine, but we're now between the Fed's kind of policy mix-up that the market didn't love to the market getting scared we're going to break above 5%. We're right back in the middle. So if this is, at least a choppy zone, maybe 30-year mortgages settle in around 6.5%, which is not great, but it's 50, 60 basis points off the recent highs, and it's 50, 60 basis points off the recent lows. So I think if there's more pain ahead, obviously yields will drop and bonds will continue to look pretty good and attractive. But anyway, Olive, what's your question there? Is it normally only best to trade them on intraday basis, or is it possible to trade them over a couple days? Usually I'm going out. I usually spot check them day to day. I watch this thing like a hawk. It's a visual roadmap for me every single day. I run actually an entire service around it called Double Up Alerts, and I also incorporate this into Newsbreakers. So I'm watching this, and daily profit plays get a piece of it too, just because I'm looking to carve out some wins every single day. But my favorite trades are when we have like this big fat outlier level that I can position towards. So big weekdays like CPI news, which we should have next week. We have non-farm payroll on Friday, but that's probably noise and just going to be swept under the rug with all the stuff that's happened this week already. And CPI news, I said FOMC days with Jerome Powell and press conferences. That's always a big day in the markets. So if there's heavy positioning one way or the other, a lot of times I can spot that ahead of time. And so I usually don't try to be super precise with 0 DTE because options are insanely sensitive. But if I give myself a 3 to 4 day window, I can usually find the direction that I want. So it is really helpful for like weekly trades and then finding some really good high probability winners. Yep, I like it a lot. How to calculate your risk on your broken wing butterfly? I'll show you. So here is the broken wing that I'm in for today. Right now, there's no risk on either one of them. My broken wing, that is the call fly, is right here. And right now, it is back to break even as far as the option prices. But I'll give you the exact P&L on this one. This one is still in for $50 profit. That's going to be full profit by the end of the day. So let's go back to this one. So this call fly, and we're trading right now at 58.28. So I'm now 50 points clear of my threat. But it's not really a threat. It's a pin price. So let's have a little breakdown on this. So when I took this trade originally, here's how the numbers work. So I'll go SPX. I put in this trade. I posted this for alerts for members in my daily profit play. The trade was a buy one call at 58.70, sell two call at 58.75, buy one call at 58.95. Okay. So the way this trade works, the way this trade is broken down is you have a buy one call at 58.70 and you pair that with a sell one call at 58.75. So this is technically a bull call spread, which is a debit spread. Okay. And it's out of the money. So when I positioned for this, I was down here around 57.75 or so, and I probably could have taken a higher premium for it as the market was rallying up for the day, but I still got in for 35 to 40 cents credit. Anyway, so it was an out of the money guess that the market will stay below 58.75 today. That's essentially what my trade is telling me, right? That's what my trade is. Okay. So let's do this. This is what the trade is. This is the breakdown of how it all works together. Okay. So that would be a debit spread, right? So it's going to be a cheap debit spread. A cheap debit spread with a $5 max profit. Okay. And on top of that, I then pair this with a sell call. So sell one call at 58.75 and a buy one call at 58.95. Okay. So that is going to be a bear call spread, and that's a credit spread. And it's wider, so we can collect a net credit. Okay. So again, this is an out of the money credit spread to finance the debit spread. All right. Move this over here. So give me a wire yes in the chat if this makes sense. Okay. So this trade with a one call, two calls, one call, that 1-2-1 is this is what it really is. If you break down the guts of this broken wing butterfly, it's like pairing a debit spread with a credit spread. And the credit spread is wider, which allows you to take in net credit on the trade, and your debit spread is still there to offer a profit trap. So the risk profile is this is live price. Price is here. I have a net credit. I have a profit trap, and then I have my risk. As opposed to a typical butterfly spread, which is I buy one, sell two, buy one, but it's equidistant, and that would look like this. A regular butterfly spread is here's your risk, right? So you can lose over here. So this would be risk, this would be risk, and then this would be your profit in the middle. Okay, but this trade is a debit. So this trade is a debit, right? So you're going to be paying for that trade. This trade, I have risk here, I have profit here, and I'm sorry. This is I have profit here because this is initial credit, and then I have a kind of a max profit trap here, and then I have risk over here, right? And so this actually pulls in up front as a credit. So the reason I like, especially for like little short-term trades, and I do this every now and then. I'm like, I did it for Meta recently, and I did it for Netflix recently. I did it for Costco recently. I did it for what else? Microsoft. I think I did Microsoft, Meta, Costco, and Netflix. And I did a broken wing or some type of like, combined call spread where I was calling the top, pulling in some credit, get myself a profit trap in case the markets were going to come back and test highs. Okay. So the way this breaks down, Alan, is I have the debit spread combined with a credit spread. The credit spread is a wider strike. Make sense? So this is only 5 wide. This is 20 wide. So the risk that I have in the trade is, and this is what I took this morning. So this particular one was a 35-cent credit, okay, and a $5 max profit trap. So how does this all work? Well, on my risk on the trade, I have a $20 max risk, right? Now, it's not fair to say like, well, $20, that's crazy. You're going to make $35 to risk $2,000. Well, not really, not exactly. And the way that the trade works out would be if price is less than 58.70, I keep the full 35 cents of credit. Okay. If price is 58.70 to 58.75, I keep the 35 cents credit plus profit trap at every $1 move. So if price today were to settle and close at 58.71, that would be a $1 bonus. 58.72, that'd be a $2 bonus. 58.73, that'd be a $3 bonus. 58.74, $4 bonus. Max profit trap would be $5 because my 58.70 and 58.75 is a $5 wide, right? So if we're closing inside of that width between 58.70 and 58.75, that is going to be a bonus trap. Okay, and my risk is if price is greater than 58.80, I take on the $15 remaining risk. Okay, so the way my risk would work would be 58.75 to 58.95. 58.95 is $20 wide. So that's my max loss, but I would keep the 35 cents credit plus the $5 profit trap. And so my net loss would be $14.65 loss. Okay, type in where yes, this makes sense. Because I was 20 wide in the trade, but I still collected 35 cents credit plus my profit trap because price would be past all these levels. I still get the profit trap. I still get the credit, but I'm taking on that risk on the outside of that trade. If price were greater than 58.80, 58.90, that'd be my full risk. So full risk, if I took a loss on today's trade, price would have to be above 58.90. Actually, I'm sorry, 58.95, because that's my farthest away strike. So if today price was greater than 58.90, I would lose. But between right now, like price is down to 58.12, probably going to close out for full profit here in the next 20 minutes, and that's 35 cents. Okay, very good. So Oliver, that's a broken wing butterfly. Broken wing butterfly. Okay. So I hope that helps kind of walk through it. I mean, it's not a bad thing. Like we came up to 58.64, but we've fallen off pretty quickly. Market's not done. I might still get lucky here. Let's check and see what this looks like. Right now, it's up around 20. It's about $30 positive. This one's still $50 positive. Max profit's 35. Let me see if I can get a credit out of this. I don't think that I can. Showing a 1 cent debit. I'm not going to close it. I'm just going to keep the full 35 cents. But in the next, let's say 5 or 10 minutes, if price starts to come back up, wow, that's crazy how that shifted, isn't it? If price starts to come back up to, let's say 58.45, 58.50, I might be able to sneak in a little bit of a credit here, but it's unlikely. So the trade ends up looking like this. So for the day, up here, I put in a broken wing call fly, which looks like that. So I have credit, I have max profit, and then I have my risk. And I didn't really draw that very well. It'd be a much deeper, it's going to look something like this. There's my credit, there's my profit trap, there's my risk. I'm definitely taking on some more risk. So my reward, so this is my credit, this is my max profit, and my risk is definitely bigger, right? So I was willing to go after $5.35 max profit with a risk of about $14.65. Is that an awesome reward to risk profile? No. But what am I trading? High probabilities, out of the money, trying to just really collect the income. If I get lucky on the profit trap, I get lucky on the profit trap. So that trade was right here. That was the trade I put above. This morning when we were selling off, I went way the fudge out of the money, and I thought, okay, well, we measured this move for over 200 points or like 180 points. This move was over 176 points from high to low yesterday. And I thought, well, if we're going to sell off again today, but not quite that was a big swing for a Monday. That was a really big swing for Monday. And I thought, well, if we went 200 points today, that'd be a monster sell-off. Anything can happen, but what I was looking at was we still had that technical level at 5,700. I thought that'd be a pretty nice bounce, so I positioned a broken wing put fly down below that, and it's right here. So down here, I did a put fly, which looks like this. I take in my credit, I have my max profit, and I have my risk. And that price was all the way down here at 56.50. So obviously price is above it, so I can keep my credit here. Price is now falling here, I can keep my credit here. So neither one got into the profit trap today, but I'm keeping the credit and I'm keeping the credit to add to my wins today. Okay. How do you estimate those strike price mainly through chart analysis? Yeah, I mean, really the option chain is what helps me the most. I look to see, okay, so if I look at the current price of the market, I look to see where those deltas are at. I also look to see what the expected move is. I look at previous highs and lows. So the reason I chose that call fly today was if the market was going to come up here and kind of flush this high, I want to give myself a little bit of breathing room, which I did. And if it came down here to flush through this low and make a fresh low, I want to give myself something below the 200 moving average. So I mean, combination of things. It's just technical analysis where I thought, okay, is this market capable of a 200 point move on the day? I thought no. But again, I could be wrong, right? This market, you do whatever it wants. It's a 138 point move today from low to high. That's still pretty significant considering the average has been around 70 to 80. We have blown through those averages these last like 8 trading days. We've had much bigger point moves intraday than I've seen in a long time. Right. And it's crazy because like the futures market has not been super active overnight. But man, intraday, the market has been way more alive. And it's not necessarily an awesome thing. I think the market coming alive like this can be really annoying because it makes it very difficult when, the expected moves, market maker moves, defense levels, all these things just kind of go out the window when the market's going to make like 150 to 200 point move. So it is, trade with caution and be careful. And I would say the best thing is keep your eye on the bigger picture because as all this is happening intraday, all this is noise. Because my better trade right now is just to wait and be more patient. And I think my better trade is letting this, flush down here, find some support, then start taking some technical jabs at like, let me see if I can get 60 to 90 days out and see if this market wants to find a bottom. Are we going to bottom aggressively? I don't know. Does this market have to have like a 10 to 15% correction before we have like a decent rally point? I don't know. I have no idea. But I think that probability wise, I can still do a lot of things to make money in this environment. Now, it might be making money to offset rough positions. It might be making money to offset, trades that are upside down. But if I can get bad trades to recover and I can take some fresh trades to make money, I'm ultimately just trading my way through it. And the NASDAQ from this high to low, I also don't think this one's necessarily done flushing either. And so we've had a what correction here? So did we hit over 10%? 9.72% correction on the Qs. Okay. I don't think we're done yet. So, I mean, we'll see. But if this is a high, low, lower high, lower low, well, I want to be positioned for that, And also, if we do see a rally that continues here, like this is a big indecision candle day. I wouldn't be surprised if I don't know. This is going to be an interesting week. We have non-farm payroll on Friday. We're just kicking off the month for the first couple of trading days. If we have some trading inside candles, and it's all going to be waiting around non-farm payroll, I think this is a good place to be for daily profit play. Obviously, we don't know what tomorrow's going to bring, but today worked out to be a nice winner, and I'll probably do the same thing tomorrow and the day after that. But with this kind of trading candle here, if price is indecisive on where it wants to go, we can take advantage of that. If there's still another breakdown lower, that's fine. But there's two ways that I approach this. If this market goes up here, I'd say to around like 50, let's say 520 or so in the Qs. Okay. If we get up to like 510, 520 in the Qs, probably the best looking trades for me are going to be waterfall income. That's a service that I have that we take weekly trades. And I've got a trade running on the Q. I've got a trade running on SPY. I've got trades running on SPX and XSP. And if I get the percentage move that I want, about a 1 to 2% run to the upside, then a lot of my trades, and we talked about this in a lot of detail on Monday during my class, it was a $7.21 credit that I have up for grabs. And I also have a $19 bonus trap where if things go well and just kind of settle in, I have potentially a $19 bonus to all my trades. So if I can manage this side of the trade and I can manage my credit for profit, then the bonus trap is just there to help. So if the market goes up, we are going to be managing $7.21 of credit per contract, and that's a good thing. And so I'm looking to close this down. If this gets under like $2.21, I'm going to close this down, take the $500 out of a max 721 per contract, and then let the market still run to expiration and see if I can get some bonus traps in there for any extra bonus profit. Okay. So again, could this market be interested in a bottom? Sure, maybe. You know, the find of the Qs on the 200 moving average is a good one. The streak is still alive. I will say this is kind of crazy. I also think this is something that breaks, at least briefly. We have had the NASDAQ running above the 200 moving average for 495 days, or I should say 495 bars. So this has not made a close below the 200 moving average since March 14th of 2023. So we are nearly 2 years into this bull market, and we have yet to close below the 200 moving average. So one thing I would be watching closely for, in fact, you know what? This is, well, we got, 12 minutes left? I don't know if this is going to work, but let me see something really quickly. So Broken Wings looking good. Trade right back up to 58.65. Nah, it's like there's no credit there. I was getting real greedy. If I did that's a bear call spread. So if I sell the 65 and buy the 80, it's never mind. It's not going to offer it. So anyway, Broken Wings are going to be good for profit today. That should be an extra. I won't officially close it or write it down until 4 p.m. because I want to officially let the market close, but that should be an extra 85 cents a contract for daily profitability today. And this is why I said just buckle up, because even though this market rallied today, this is a lot of noise. And again, you're getting some pretty big swings. Look at these last 20 minutes of trading. This thing topped out here around 325, and for the final 20 minutes we've been sitting here in this session, it has dropped. I mean, it's dropped 70 points. Huh. Like these bears aren't done yet, you know. And I think what's going to be tricky is, like, if you're trying to call this the bottom, like, you could be shaken out of this trade. You know, I did this yesterday and I got tripped up. I called the bottom here and I got tripped up for like a $1,100 loss. Alan, the trades that I'm running right now, yes, they're taking up more buying power than what I want. But as I've said in class, why am I trading that way? Because I'm giving myself lots of room for error. I'm still managing credit, and I have a profit trap as well. So on some of my waterfall trades that I have running right now, I have waterfall trades here with some bonus profit. Right now, let me take a look. XSP is where I have a lot of positions. Here's my QQQ. So I've got a 520 by 519. Like right now, this is a bonus trap that's probably going to be in profit. I have until April on this one, but this is essentially a free hedge. I pulled this trade in for 53 cents. I've got a $1 bonus trap. So if I can pull out most of my credit on the credit spread, let's say I close this thing out for like a 5-cent debit. Well, that would give me a 48-cent winner, okay, plus a dollar trap. And so I make $1.48 on the trade. I will get back my buying power, and off I go taking another trade. Okay, so QQQ looks pretty good. That trap is in. And then I also have Qs on a slightly more aggressive position. This one has a bonus trap of the 535 by 530. But this one may also be dealing with a little bit of assignment by me. Maybe not. I'm not sure. If I get assigned, I'll manage it. I got plenty of capital on my PM accounts. But that trap is worth $500. So this one would be, I pull in $2 of credit. Okay, so I have 204 of credit, plus I have a $5 profit trap. Okay, and that $5 profit trap is sitting near the all-time highs. So this one could be a great trade where even on the conservative side, I think I could end up making $704 per contract here. That's not bad. Okay. So the XSP trades, yes, they've taken up some credit, they've taken up some buying power. Okay, but the trade is threatened at 535, 545, 540, 560. Okay, so we would have to go here on XSP. XSP, wow, this market is tanking today. Crazy. Just this last little final 35 minutes of trading. Like we are quickly flushing all the way back down to the lows. This is nuts. Let me see here. I might have my MES trade getting back into some profits. This little guy right here. That little hedge is back up $144. This is like maybe the unsung hero of another big flush to the downside. This may put on futures market might end up paying me like another, I don't know, $400 or $500 of profit. If we have something disastrous, then maybe I get a couple $1,000 out of that, but unlikely. I didn't go too big on the contract sizes. But anyway, that's a lot of noise today. This market has made a swing up around 130 points, and just in the last 20 minutes of trading has dumped 95 points. Wow. Like I'm telling you, like this is crazy. Like this market is highly volatile, and it's happening intraday, which makes it really challenging. Everyone complains about like, oh, the market doesn't move during the day. Well, this is why it's not that fun. Because in a short-term options environment, intraday trading like this, it just throws your prices all over the place. And it's not fun. You could have, I mean, again, if you're on the right side of the trade, then yes, you could have a call option or put option, just pay you, 3, 4, 500%. But this trade for the day, let's say that you're getting kind of greedy here, and you bought a call this morning and it's going your way, going your way, going your way. Well, if you're not careful about protecting that call, this thing just evaporates to zero. It's that easy to lose money, right? And to turn this in, it's just, I mean, who the heck is going to buy a put for a 0 DTE in the last like 20, 30 minutes of trading? I don't know. Nobody. Terrence says, yikes, what did Trump say this time? Well, that's kind of what the feel's been like, right? All right, let me do one quick check here. So I don't think I'm going to get a bonus profit trap on SPX with the put fly because it's so far out of the way. But you never know. 1, 2, 3 on the put fly. Yeah, that's still trading for 0, so that's fine. That's going to be full 50 cents. And then my other one, the call fly, is trading now for 35. So there's my $85 a contract, and added that up with a daily profit play today, which was a winner. That one turned in $50. So all in all, not too shabby. This one, waterfall, DPP PM. I closed out the AM already. I've got some other AMs running with the proper. So I had some. I wanted to clarify this. I had some traders this week in my daily profit play. I took a PM expiration for the 17th, and I also took an AM expiration for the 17th. They are different expirations. So I had some traders email customer support or contact customer support saying Chris has the same legs. I don't. Okay. The legs are the same. One is a PM expiration, one's an AM expiration, so you can have them overlap because they won't. The strikes don't matter. They're totally different expirations. Okay. All right. Well, so much for $30,000 in profit today. So much for 100K in profit year to date. Just a lot of noise again, but I'm still bracing for more downside. We can check and see if there's a Y today for the final few minutes of trading. What do we have? Told advisors he wants to announce Ukraine minerals deal during Tuesday's speech, which he speaks tonight. Canada will be imposing 25% tariffs on U.S. imports worth $30 billion Canadian. What's that worth in the U.S.? Like $1 billion? Just kidding. 30 billion Canadian. I mean, now the dollar CAD's trading at like 145 or so, 146, 144. So just retaliation going on between Canada. I don't know if Mexico is going to join the party as well. Will impose 25% tariffs on further Canadian 125 billion U.S. imports in 21 days' time. That's 11:08 today. So the market didn't really care about that. I'm just looking for like what's happening these last 20, 30 minutes. I have no idea. Doesn't really matter. I think we just gotta, stuff the towel in our mouth, bite down, and get ready to trade through it. So I'm still hedging. I've still got some forgiveness. I still like these areas on all these indexes, right? So futures taps the lows today, but where are we back at on futures? Okay, where are we at on futures? Look at this 15-minute candle. In 30 minutes, everybody, in 30 minutes of trading, this market took out most of what it created today to the upside. That is a big shakeout. Like, this is a lot of shaking out. And I don't know where we're going from here. Is there more downside protection, or is there more downside pain? Maybe. Like, what does this candle look like? Well, that's a big indecision candle for the day, right? And if it ends up staying indecisive, well, we might have a little bit more indecision here. I do wonder what the non-farm payroll announcement gives us price action wise. And I don't think it's going to be a major event, but I wonder what the market is anticipating for a Friday. If we have a terrible, if we have a terrible jobs report, get out of here. Let's go to Thursday, Friday. If we have a terrible jobs report, and I don't know what that looks like. Does a terrible jobs report mean we print, way under 159? Do we have a higher, like a 4.1 or 4.2 unemployment rate? I don't know, right? I don't know. But I would imagine this may not look too good for Friday. And how does the market react to it? I don't know. What does the Fed do with it? I don't know. Powell's actually speaking later in the morning, which is going to be interesting for Friday. I will not be here Friday, so actually I might just put some hedges on and walk away. Speak about economic outlook at the University of Chicago. Okay, Monetary Policy Forum, got it. So we have non-farm in the morning. Do they not know how to print 8:30 a.m. anymore? This says 6:30. This is like the second time I've seen this on Forex Factory. Non-farm is an 8:30 a.m. announcement. It shows 6:30 a.m. And I'm still in the GMT -5. Like, what the heck? See if that works. Friday. There we go. I didn't ask to be put on Mountain Time. I live in Mountain Time, but I always like work on Eastern Time. All right, anyway. Let's see. Do you trade market profile? Mexico to respond on Sunday. That's fair. So yeah, more noise out of Canada, Mexico. All right, dust settled 57.79. Two winners on Broken Wing Butterfly. That's good for daily profit play. Taking the winners there. Okay. And we still have some trades running. All right. Yeah, so hedges, hedges, I took off most of my hedges outside of some MES plays. The trades that I put on for hedges this year were when we were at the highs, I put on a hedge out to the end of March. When we hit this high, I put on a trade to the end of April. When we hit this high, I put on a trade to the end of April. Now, on this particular high, what I did is I put on a trade that would go up or down and give me some profit. That was the trade. So I put that entire trade on for about, I think it was like a $480 risk for a profit potential of about $2,400 if I max it out. Today I closed it out. It wasn't $2,400. It was $1,400. So I was risking about $480. I closed out for about $1,400. That's a pretty good return on risk. So that hedge is done. The one trade I still have running is it's an out of the money MES play. But right now, look, I don't know if a hedge is going to be very, very profitable. Okay. And I mean, it doesn't hurt. I mean, if you put in a hedge right now and the market goes lower, cool. Well, you can grab another, let's say, 20 to 30 points on the SPY. How's that going to be traded cost effectively? Well, here's a pretty easy way to do it. SPY, we're trading at 576. If I did, let's say a 580, let me see what I can do here to pay a little bit less on this one. So if I go SPY, let's go out to, I'll probably go out to the end of April to be safe. If I bought, let's say the 580, I'm going to buy a put at 580. And then let's look at a really nice target down here, maybe the 540 to 550 zone. I think 550 is safe. I'll get some premium, make it a little bit cheaper. So if I just bought this put, okay, if I just buy this put at 580, there's a couple ways I can do this. Right now, I can split the difference and buy the 580 and then sell the 570. Okay. So that costs me $3.70 to make $6.30, right? Like that is a fair hedge. Right now, you're getting so much premium on the sell side. Now, if I want a little bit more profit potential, I can go $4 here, $4.32, $4.62. So I can pay less than $5 and I can go after about $900 of profit per contract. So that is about a 1.8 to 1. Is that about right? I'm risking 492 for a max of 9, we'll say 910. 910 divided by 490. So I got about 185% return on capital if I'm right. And what does price have to do? Fall. If price falls down to 570, 569, I pay for this trade, right? If I get another, $7, $8, $9 of movement, I'm starting to get profit on this trade. It's not a bad trade. It's not a bad trade. I kind of like this one better. If we go to the let's say 570, making 630 for 370. So 630 out of 370, that's 170% return on risk. If I go a little bit closer here, 578, 285 to make $500, it's going to be a little bit less. So 515 out of the 285 max, 180% return. I mean, it's doable, right? It's very doable. This one's not bad. 245 versus 270. Kind of like this one better. Even going after like $10. 337 to make $10. That's pretty good. So 662, 195%. So a trade like that would be a pretty simple hedge. So it would cost $335 or $340 in order to make $10 of credit. So the way that math works is if you did have this trade go all the way out to April, you're not going to achieve max profit on this thing unless price is below 567 at expiration. But if we are dropping aggressively, just in case, if we are dropping aggressively, then we could see our, $3, whatever that debit is, $3.40. We could see our $3.40. If price is falling, we can see that trading for $6 credit, $7 credit, $7.50 credit. If it's happening really quickly, we will still see some appreciation in our trade. All right. So I don't think it's an issue to turn it into some profit on the hedge side. But where does that trade go wrong? If all of a sudden this market bounces up here, that hedge is worthless. And that's why, at this point in time, I'm not going to get crazy aggressive on a hedge. I think it's necessary, but I'm almost better off going out farther and out of the money to see, like, what, if this market wants to tank, I'd rather buy like a 550 put and just see what that costs me. Right now, a 550 put, which is way out of the money, it's going to cost me, that's still stupid expensive. It's going to cost me $700 to $800 for a put. So I'm not going to trade that. Now, if I went to a futures feed, MES, and I want to see where this one could possibly bottom, MES has a nice little window, possibly down into like the 5,500 zone. So if I buy a 5,500, let's go out to the similar timeline. Let's go to the 30th of April, 5,500. Okay, now it costs me $350. This trade, I think I'm going to take. So going out to April, actually, it may be a little bit cheaper. Let me go out to May. Let's see, May 30th, 5,500. 5,500. Cost me $500 max risk. But it does give me enough time that if I'm right, this thing will gain. Trying to think. Are we done? Let's see. I'm going to do this. May is fine. $500 is around, quarter percent of my account. I think that trade is important to have, and I've got to be willing to risk it. I really do. So if I did the 5,500, why would I buy that? Because I think I've got enough time here that if price were to quickly, and we don't know this, but if price were to quickly make its way down towards 56 or 5,500, and I still have enough time left in this trade, if I'm in this section of time or this section of time before the theta decay really starts to crush me, I can turn that $500 into probably another $5,000 or $1,000 of profit, maybe more. So not a bad trade. Now, could I do this a little bit more cost effectively? Sure. I could look at this and say, okay, well, if I sell that level and I buy the current level, now it costs me $476 to still make $1,200. That is, again, a really good return on capital. 1273 max profit over the 476. It's 267% return on risk, and I'm paying a little bit less for the trade. The probability of this trade is a little bit higher because my long put is actually at the money, as opposed to buying a put that's out of the money. It's just a lower probability trade. That's the downside, right? So I could take this trade and still have some appreciation. I need to cover this thing by about 95 points. But if we're going to drop down to 55, I don't mind this trade at all. So right there cost me less than $500, and I get a max profit of about 1380 on the trade. So let's say 1380 divided by 492.50. So max profit's about 280% return on risk. It's not bad. Buying power reduction is only $500. Not bad. I don't think this is a terrible trade to have on, just in case. So, and that's also out to May. Is that out to May? That's out to May. So even if I could turn this trade into a max risk of $500 and see this thing pay me $500, I'm still happy with that hedge, right? If I lose the $500, well, the whole portfolio is probably going up anyway, because this would be, if I lose on this trade, that means price is not going lower, right? So I think I like this trade enough to take it. If I wanted to give myself a little bit more intrinsic here, it might cost me more, but let's find out. If I did a at the money, $59's in the money. Yeah, it just cost me a little bit more. Okay, that's fine. 58.50 to 55 cost me right around $500, just under $500. Not a bad trade. So as long as I'm getting filled on this one for less than $100, that's less than $500 max risk. There is a 200+% return on risk if I am right, getting this thing to full profit. The goal on this trade is to offset. So if I did this on all of these accounts, that would be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 accounts. Let's say that on the conservative side, let's say I make $500. Okay. That's still a pretty good winner. If I walk away with $6,500 towards my bottom line, it offsets some of my drawdown. I think that trade's okay. If I sacrifice that, it's no big deal. If it goes to the upside, this P&L is going to swing back in my favor. I'm happy to, let that trade go. So that's probably what I would say is worth considering for a hedge. I know we just bounced off the 200 moving average. And look, I could be dead wrong. This market might just come down here, test the lows, and then come back up. I don't know. And that would be a wasted hedge. Okay. But in the event that this is going to go down lower and down more, and this market doesn't really stop at this resistance level, doesn't stop at the 200 moving average, well, then we clearly have some more pain ahead. And that's going to be the hard part. And if you think about how painful COVID was for a 30 to 45 day window, I'm not overlooking the fact that a little 5 or 6% correction may not be enough, right? This market's sitting here near all-time highs. Valuations are pretty high. I'm not saying it's a bubble necessarily, but man, it's going to be hard for the market to justify these high of prices when growth forecasts are decreasing, right? And consumer forecasts are cautious. So I think that is like the great debate of is this market overvalued? And if so, how much pain do we need to flush it out and stabilize it and revert to the mean? Right? So I think I'm going to take this trade. 480, so I can do the 58.50 long put by 5,500, and that's going to cost me about $475. So I'm going to take that trade out to May 30th and just keep an eye on it. I mean, obviously, I don't really want to have a sell side to it. I want to have this be like unlimited profit, but I also don't want to spend more money. I'd have to spend $1,000 to get that trade. So I'm going to sell and cap it, but this also is still like a 200+% return, which I'll take. All right. So I'm going to buy this for, let's see, 471. This puts me at 521. I'll take this trade 58.50 by 5,500. That's a $350 max credit. What cost me $93 and change. So let me see if I can get out of this thing for 93.25, get filled at the mid price. Okay. So 93.25, let's try the mid price. I just got filled at 93.25. So I'm going to go ahead and take this for all my accounts. Getting filled in that hedge. Okay. And 9072. Couple more accounts here. Come on. $93.50 not filling. $93.75. Come on. Son of a biscuit. 94.25. Come on, Tasty. We still got 45 minutes, man. Crikey. I'm going like $2 above the mid price. I'll get this last one filled, and then I'll track it, and I'll let you go. So let's go 95. Come on. Filled at 95. All right, so that's going in as a hedge. This is a MES hedge. So this is for everybody. Oops. So I did an May 30th expiration. May 30th expiration. And I bought the 58.50 put. And I sold the 5,500 put for a 93.50 to $95 debit. So about a $490 max risk for a $1,200 to $1,300 max profit. Okay. And the way I'll manage the trade is if price continues to flush lower and we get down to 56 or 56.50 or 55.50 or 5,500, I'm looking to take that profit. So I may not be able to close out for the full $1,200 or $1,300 profit, but if I can turn a $490 risk into $500 a profit or $550 a profit or $700 a profit, to me that's still worth it, because adding that up to all these trades is still a nice like $6,000 or $7,000 hedge to offset some of these drawdowns. Okay, so that is another piece of this, and I'm just doing this mostly for protection. Okay. I mean, look, this is something that you got to be willing to sacrifice. This is the way the hedge game works. You can either trade and diversify your way through, and you don't really have to hedge much. But the way that I typically do it is every like 30 to 60 days, I will basically buy protection just in case I need it. I tend to, add a little bit more to it when I think the timing is there, but I don't think that we're necessarily done. I think that the pain, as far as the technicals go, could be anywhere in this area. So I don't feel comfortable saying that this is the bottom. I think the market could respond from there. We did bounce off the 200 moving average on the future side, but we still haven't hit it yet on the SPY, right? And this is another very high bar count. So I think having today's candle look like this and have more pain to the downside. Okay, well, does it bounce aggressively off the 200 moving average? And if it does, yippee skippy. If it goes through it, where we have April, August lows, and it's through the 200 moving average, the best thing I think for a trader to do rather than calling the bottom would be, if this hits the 200 and closes back above it, you might have an opportunity to buy it. If it closes below it and then closes back above it, that's an opportunity to buy it with a stop below. So I don't feel comfortable calling the bottom. And therefore, if we do have more pain, I want to make sure I have some ability to offset that. Okay. I'm not going to offset all of it, but I'm going to try my best to offset some of it. And that way, if there is a recovery coming in 2025, whenever that is, if there is one, then this recovery would get me out of trouble and potentially, back up towards these all-time highs. That would get me back up to watermark highs and possibly more. And that is probably my price target for the year. If we get up to this level, wherever I'm at for P&L, I will likely be going into like preservation of capital mode. So I'm not trying to mess with what this market may or may not be doing. I hope the market shows some resiliency. I think this hiccup that we had here is potentially what could be matched again, and we're going to have lots and lots of scary volatility. But we could also see the same type of enthusiasm that we saw right after that. Because everything that needed to be cleansed is cleansing. I mean, Mag 7 stocks continue to make money. Mag 7 stocks have so much cash, they're like, you can't compete with them. But they needed to be not 34% of the market. They needed that market cap needed to cleanse. So that's what we're experiencing. Don't expect this to be fun or easy. I mean, it looked a lot different if this market didn't just drop 100 points in the last 30 minutes of trading. Like that high to low right there, dropping literally 101 points. This is not done. This volatility is not done. So buckle up. It's going to be wild, but we'll figure it out. Okay, I'll let you go. We went a little bit long today. Appreciate if you like and subscribe, all that good stuff. That does help the channel, and that gives me a little bit of bumps on YouTube, where when people search and they're looking for anything live market, my video pops up in that little feed on the right-hand side. So when you jump into any YouTube video, you will see, let's just search for, Tasty Live. Check out, their content. So let's say you click on Tasty Live. Okay, what I'm looking for is, if you like and subscribe my channel, my videos can pop up over here. That helps. So all it is a little thumbs up. And if you're subscribed, awesome. If you're not, feel free to subscribe. But that is youtube.com/Chris Pulver, as well as youtube.com/Financial Wars. Live on both. So that's where I'm pushing all these things. I'm also posting more shorts. So if that helps, hopefully that will help. I'm doing this on both my channel and Financial Wars, because apparently people's attention span doesn't like long form content. So I'm wanting to do both. So I'm trying to get more and more and more. Let's see what these look like on Instagram. Let's see what these look like on TikTok. Just because I hate the fact that that's what you got to do, but let's see if it works. So anyway, I appreciate everyone being here. Happy Tuesday. And good session today. Good stuff. And I'll see you tomorrow. Thanks. Bye.